Hi folks, Jack Lane here. I'm the 2011 President of the London and St. Thomas Association of Realtors, one of Canada's 15th largest real estate associations. Our jurisdiction includes Elgin and Middlesex counties, a trading area of over 500,000 residents. The third quarter of 2011 has just ended, so I'd like to update you on the current state of our real estate market. Now, the global financial meltdown of 2008 had a significant impact on our market here, as well as the rest of the world. But the good news is we appear to have bottomed out in 2009, and to be in a slow but sustained, and what's most important, a sustainable recovery. So far this year, sales are down a very marginal 0.8% compared to last year at this time. And if we keep up this recovery over the next quarter, 2011 is going to look a whole lot more like 2010 than 2009. That's good news for the local buyers, sellers, realtors, and the local economy in general. Sales only tell part of the story. Supply is another key factor in judging the health and vibrancy of the real estate market. As of September 30th, 2011, listings were up 6.4% over the previous year, and inventory, those listings that remained active at the end of the third quarter, were also up 9%. This chart, which shows year over year since 2002, the number of listings taken in the first three quarters. There were fewer listings in 2002 and 2003, which means buyers had to compete for fewer properties. In other words, 2002 and 2003 were a seller's market. The number of listings started to increase steadily between 2004 and 2008, which had less to do with the kind of market it was and more to do with how active the market was. It was a pretty happening market at that time. Then came the beginning of 2009, and potential sellers stayed on the fence out of fear and uncertainty. The next year they rallied and got back into the marketplace. Listings went up, and this year they've gone up that much more. If you compare listings to sales at the end of the third quarter, you'll see that we have nearly the same number of sales in 2002 and 2003 as we did in 2010 and 2011, but far more listings. And that's because we moved from a seller's market into what we call a balanced market. This is good news for buyers who have a larger pool of properties to choose from in a balanced market, and therefore more room to maneuver. For sellers, a balanced market is a little less advantageous. There's more competition, which means their home might stay on the market a little longer, and in some cases prices need to be adjusted. However, most buyers are also sellers, or they will be at some time. Therefore, a balanced market is a good thing. Let's take another look at a market indicator, average house price. The average sale price is calculated based on the total dollar volume of all properties sold. What tells us the market is healthy is a moderate increase in the average house price over time. And that's exactly what we've seen in our market. The average price for a home in LSTAR's jurisdiction at the end of the third quarter stood at $232,511. For an accurate gauge of the level and pace of actual appreciation, we like to look at the increase in average price month over month. Here's what's happened in the average price over the last year. The London CMA continues to be affordable when compared to other centres across the country. Here we have the Canadian Real Estate Association's latest major market survey, published in August 2011. So as you can see, we continue to look pretty good here in the London and St. Thomas area. The market has been balanced and brisk, and we continue to see modest but real price increases over time. 2011 is shaping up to be a good, solid year in terms of real estate. For more information on real estate in the London and St. Thomas area, please check out our website at www.lstar.ca. And from all of our 1,540 Realtor members, have a great autumn. Thank you.